following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show Thursday morning here in the States. And thanks for any of you guys who came to the webinar last night. Thanks for attending. Thought we covered a couple of bases. Hopefully got some things out front that can be built on. And again, anytime you have questions about the scanner, this is what we did the webinar on. I forgot to mention that. Feel free to ask them. Send emails in. We want people to be able to use this to its ultimate potential for individuals. And, asking questions is, without question, the best way to solve those problems. Everybody's got the same problem. It's how do you find trades that are high probability trades? How do you find the right trades to be in at the right time? That scanner may solve that problem. And it's the same question that institutions ask, brokers ask, prop traders ask, and that's lending credence to the same solving the same question for you. So, TFNN was playing some spot on music this morning with Steely Dan. I don't know if you guys caught that. It's one of my favorite songs. You guys can call in 877-927-6648. Feel free to ask questions on the air, and feel free to ask questions about any instrument. We can pretty much pop any instrument right in that scanner and take a look at it from a profile standpoint without even looking at the charts. So that being said, 877-927-6648, we're going to move right into some charting situations here. And we're going to not use the scanner for a little bit. We're going to look at the euro, and this has been something. I'm going to go into our currency grid here on the scanner really quick, and we're not going to stay on the scanner. But here's the situation with the euro. As you can see, we're just getting reds, still hanging in there. Actually got a new cell appearing there, but getting some traction on the euro here. Let me pull that up again. That was the wrong. There it is. Okay, sorry, I was showing the EUR AUD. EUR USD, red across the board here. And remember, on the scanner, as the cells get deeper red, that's the farther you are, or the farther state you are away from the profile itself. So the lighter green is closer to the profile. As you can see, 1 there. 1 means that it's the first bar breaching. So really, it's a little bit of a situation here on the downside, and we've, this is something, you get stopped out of things. Sometimes things go in your face, and you have to just kind of regroup and reassess where you're at with some resistance points and breakdown points. This Bloomberg brief that I did on the euro, hopefully heading south here, and some of the reasons why, we're built around these profiles, and also built around going to our daily. Some of the profiles here and the navigator combined on our daily. So, what we want to always try to be aware of is where are the long-term resistance points, and how do we allow those, or in this case, resistance points and breakdown points, how do we allow the next time frames down to try to guide us through that long-term view? We talk about that all the time, and we talk about, where do we find high probability trades? The euro, when we got, again, up into this top of the box here, as we call it, top of the profile, 114.67, we got in that general neighborhood. It popped up on the scanner. Not that I didn't have it on my radar screen in general, but those were ripe opportunities. And we've talked about trying to stay with that mindset on this product. We got back up into that 112.25, and that coincided with our weekly weekly POC. Remember, on wide profiles, you've really got to pay attention to this POC. This wasn't on a relative scale, a wide profile, but again, they have to be paid attention to. And when they line up with, and this is what we were kind of banking on, this was in the general vicinity of this unfair high here, 112.25. We tried to use this. Remember, they're going to save the day in Greece, and blah blah blah. And then we had a little bit of a rally, but those inflection points, you got to leave yourself a little bit of noise factor on these to be wrong. But those are really cool situations from a long-term view. You try to, okay, we got a victory, we got a win on the board. Now we're going to try to find more resistance points to sell. If we get stopped out, so be it. That's what happens. That's what happened to me in here. I was banking off this, then we had another level, pick a battle a little bit later. And that's just the way trading goes. It's lose a little, lose a little, lose a little, make a lot. We talk about that all the time. Now, we talked about 109.82 unfair lows on the daily being the target, along with this 109.48, 49, that DMZ, as I like to call them, down below, not wanting to buy that, but that was something that we could take some weight off the table, at least temporarily. So what happened, just to kind of give the the litany of what happened in the past. We're going to talk about the future in a second. We got down here. We kind of had a little bit of a rally. We actually rallied back into some areas that we were thinking were going to be ripe areas to sell again. And I want to show this right here. We kind of got back up into here. We reached, again, something that was, and that's the 112 area. This is the latest move up. We got back up into here. And if you're trading on a short-term basis and using these inflection points, remember, thin profiles, you almost want to trade breakouts in general and things like this, but remember, long-term takes precedence over short-term, and we got into some areas again to sell, even though we had breached these short-term levels. Wasn't the greatest level in the world to sell there. But now we're just kind of getting clean and clear on the downside. And, what's next for Europe? I think there was some victories by us, some kind of semblance that there is going to be a problem solved there. That was just hooray. But their main core problems are still there, and I'm talking fundamentals now. So mixing in 20% fundamentals and 80% technicals here, we've talked about this going to par. Again, we talked about it here. We obviously had about a 1,000 pip rally. Again, that's what stops are for, picking battles at high probability areas. And if you got to say uncle, you got to say uncle. It's better to kind of take your ball home and come back again and play the next day than it is to hang on to bad situations. All right, so make sure you put stops in. But now the big time resistance levels for this that are to be sold on any retracements are 109.49 into 109.82 based on those weeklies. Now that we kind of had a breakdown, and we're pretty far away from that now, would I keep, and here's the short-term 240s, would I keep this on a short side? I would, because we don't have any new indications on our even short-term time frames. We don't have any magenta bars down here on Navigator. We don't talk about that a lot. And we don't have any new profiles attempting to appear. Remember, going back to the scanner, I'm going to go back to our EUR-USD. When you start seeing any orange peelbacks on here, that means that we have immediately a new profile attempting to appear, in this case, a new demand area. Okay, so I'm not a sales guy for this company. I own the company. I started the company. I put the original $1 into the company a long time ago. I believe in this. I use it to trade my own personal money, and we have prop traders doing the same thing. So we believe in this product. We believe in this concept, and what it allows, I think, is for traders to be patient, including me. I'm the worst. You put me in front of a screen and have some lights flashing, and I'll be banging the keyboard. I'm a little older now, and maybe this is a function of that, but this scanner allows me to be a little more patient and surf around and find probability setups that I want to see. And if I'm in an instrument, I can throw it on the board here and just keep it on the monitoring side. I'm going to go in here and just restate a couple of things we did in the webinar last night. I can go in here, and I don't talk about a lot of this on the show, but if I want to put IBM get it in there, right? IBM, the euro, and corn. And this is always the contract. You got a reference contract. This is December corn. If I want to put those in a basket, pay attention to them, save this as a setting. I can go in here, pull this number. I've got the file exported. I can go in here and do a reset. Well, clear settings, reset sorting. Here we go. Do a reset, and if I want to go back and have that list up, I can go in here and load settings. Boom, here we go. It's a little crude relative to this day and time, but put it on the board, and you can monitor your instruments of when things are happening. When we have a breach of profiles, even on a short-term time frame, you'll be aware of the stocks and the instruments that you normally, the world that you live in, basically. So if I go in here, I'm going to go to clear settings, reset settings. If I go in here to, for instance, we're going to talk about the S&Ps a little bit and this drift up after the next break. I just want to maybe keep hammering some concepts home here. If I want to find out 60-minute changes above the box, or excuse me, below the box, let's do that. That means 60 minutes or time frames on instruments that are just starting to drift lower on the 240s. I'm going to put the 240s in here, and the 60s. It's going to keep this list up, but it's also going to re-import things that are initially becoming available for that filter. So if you like a certain filter and you want to see stocks that are meeting those criteria, and let's do one that's pretty pinpointed. Let's do above the box and below the box or something like that. Okay, so here's a more concise list, a more concise filter. There's 5 stocks meeting this criteria in the S&P 500. If I keep this sort up real time, it will import new candidates that are meeting this criteria. So again, if you like to see stocks that are sitting on, inflection points like this, top, bottom, there's nothing there. Let's do this. Okay, I want to see dual time frame lineups, bottom of the profiles, 2 inflection points in the same neighborhood lining up. We've got Constellation Brands and Johnson Controls. That's it. And then you're like, okay, I like to take shots on that setup. I look at my charts, and I place the trades. Guys, we're going to come back from this next break and talk about the S&Ps and a couple of things that are important before the open here. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So we hit the scanner a little bit, talked about the euro. Let's get right into the S&Ps. And guys, here's our breadth situation. This weekly's probably going to roll over and start getting positive a little bit here on the open. Remember, these dials are based on the internals and what the internals are doing. Here's what the internals are doing on the close here. But remember, these stocks are opening higher. A lot of these internals haven't opened yet, and these are going to start adjusting and definitely adjust pretty hard right when the market opens. So S&Ps are up. I don't have to tell you this, 8 points right now. Netflix, the Intels of the world, not a bad little situation. Everybody's euphoric again. And the fact of the matter is, I'll go into the scanner here and I'll pull up my futures section. And let me get this. Okay, so I'll look at my S&Ps here and see that we crossed the border 1. And there's where we're at. We've got some daily on for highs a little bit late, a little bit higher, 21.22. But this is a pretty big deal. And if we get a close above this pretty big deal at 21.04 that I'm pointing out right now, can I blow this up? Yeah. There's 21.04. That's a big deal. So what we were trying to do recently, if you want to know, is our breadth has been negative on the long term. I'm going to go back to my dashboard where the S&Ps are, and we had our intermediate breadth cross recently back positive. That was around July 11th. Now, with the weekly negative, the daily going positive. When I say these crossover points, these are when the tide of the marketplace, as Basil coined at one time, I love that term, changes. So and you can check these crossovers. You can look back at time. You can do a little bit of study, and that's why we put these on here. The weeklies, this is a pretty rare occurrence, and I'm going to take out the middle ground here. When we have these, this is crossover to positive, crossover to negative. These were significant events, and we hadn't been crossed over or close crossover till recently. We're still in that state. It's not the rosiest picture on the long term for the S&P 500 index. So I'm still not a buyer, and that's been okay because as we've looked at these, trading opportunities, we pretty much focused on inflection points on the daily. We focused around here. We focused around here. We caught some targets down below. This was an area that was just incredibly insane, gapping up and down overnight, and we talked about not being in overnight trades. And then we rallied back up into this 2091, 2092 area, and that's where we tried to pick a battle on the short side. No dice, because we have to have stops in place, and that was the ripe opportunity, letting the market come to us. So we took a shot there. We took some really good shots before. That didn't work. Another shot was around 2104, 2106 the other day on the close, and we talked about not being in stocks overnight. So hopefully you guys didn't get hurt with this. And if any of you guys went long, God bless you. But, the odds, in my opinion, relative to the internals, they're not the rosiest situation yet. But it's kind of weird how we're sitting on all-time highs. And that situation's not as rosy as it, in my opinion, needs to be. As a trader, too, we have to be able to adapt, right? We have to take the medicine, and we have to – one of the hardest things to do for proprietary traders that we had was to be short, get stopped out, and then all of a sudden go long. If you sit there and trade, you know what I'm talking about. It's very difficult to go, okay, mentally, okay, God, I just took a hit. Now let me be stupid enough to go long, and then it reverses into my favor for the former trade. I shouldn't have got stopped out. I'm an idiot, blah, blah, blah. Listen, the trading is about literally protecting capital. That's the defense part of this, and that's your main MO, all right? The first thing we tell prop traders is learn how to play defense. If you break even, awesome. Then you can figure out how to twist the original foundational concept in your own way, make it move forward, start making money. All right, taking losses is a part of this game, guys. If you're going to hang on to these things, not good. So when we come back from break, we're going to stop all the dark and gray commentary here, and we're going to get into a couple other things that we need to pay attention to. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Just looking at the scanner here, and looking at the sectors, looking at them on a daily situation, on a weekly. The weekly sector analysis, if you will, relative to profiles, and I've got this ranked as a heat map relative to weekly crossovers in breadth and the magnitude up or down. It's just nothing really is towing the line here as far as like the consolidated view on a very long-term scale to move north based on where the index is at itself. All these components are more, for the most part, within this index or S&P 500 index. But here's the daily grid. Here's the 4-hour. And again, you have to really kind of let the market open. We got a decent gap here today to really get the magnitude of where everything is at relative to profiles and how that breadth is calculated. But just something to pay attention to. We're just, here's the kind of very mixed up state on this thing elevating. So again, the dailies have turned positive. And we talked last night, literally on a short-term basis. And again, the stocks aren't open. If I can say that one more time, give me a gold star. But as we look at this, you can go back in time and look at 60-minute crossovers. This is a system in itself to trade the S&Ps. It's not a fail-safe system. You need to put stops in, but this coupled with some of the major inflection points, or not coupled with the major inflection points on the index itself from the scanner, from the futures section, going in here and looking at these inflection points on the S&Ps in general, right there, right in your face. It's a great system. So when I go back to my dashboard and I look at my 60-minute, so simply put, I'm going to blow this up here. This is a long opportunity. This is a short opportunity, 715 on a short-term basis. All right. Had a crossover, starting to have these movements this morning. Obviously, these instruments are opening, but long, short, always in the market. Breadth crossovers on our short term is a system in itself. If you get the scanner for no other reason than this, it's like 3 points on one S&P contract. And nobody else offers this. I'm sorry to be a sales guy right now, but we use this internally, and I know it works. And we've done back testing on it. I've showed that a couple of times on the show. I've shown the back testing from the Thai Set 100 to the Columbia Coal Cap to the S&Ps, and it's a great tie to the marketplace indicator, as Basil would put it. All right, so as we look at this and as we look at what's going on with the market gapping up again, we want to try to find stocks that maybe were a little sick acting. And we've been looking at sick acting stocks every time the market rallies. Because as you know, you watch this show, the theory is the weaker stocks, the relatively weak stocks towards a strong market are showing their hand. They're opening up and saying, sell me, sell me. And in a market that's pulling back significantly, the stocks that are holding up, and we can find those stocks holding up relative to profiles. A lot of times, you'll go, okay, well, Microsoft's kind of hanging in there or whatever on a market that's pulling back significantly. But is it hanging in there to the point that it's actually above the balanced area, or even sitting around an inflection point that you can take advantage of? And where's the breakout point, if there is any? So this, in my opinion, gives you those things to think about. And what I'm going to do is I'm just going to do a real basic sort here. Stocks that were trading below the profiles on a weekly and below the profiles on a daily. And I'm going to actually restrict this to only matching results. So what this is showing me, believe it or not, all these stocks that I'm showing you are still dogs of the S&P. And they're dogs of the S&P relative to profiles. And remember, when you see a 1 like that, those are, ranking. And we're actually going to put a sorting feature in here. After you do your initial filtering, you're going to be able to sort the column. And I'll show you why I like to sort the column. Let's stick with this sort first, and then I'll tell you why that's key. All right, so we've got some situations here. Fluor Corp. These are ones sitting on the edge of the cliff, possibly. We're going to look at the chart and see where they've been. Frontier Communications, FTR. Why am I picking these? Now that I've identified some baskets of stocks that are showing just long-term and intermediate-term weakness, and we've got some other ones that are even showing coupled with even shorter-term weakness. But let's focus on these. These are sitting at the inflection point on the daily. And we're going to take a look at one, Fluor Corp, FLR. And we're going to see, no mystery to anyone, this thing is ugly. And, the cool thing is we went through recent lows on this just from a kind of a classical technical analysis kind of action standpoint. We went through there, made new lows on the week last week, and then we kind of bounced back and retested that area. No new profiles are appearing here on the long term, which is great. And it wasn't like a snapback, like didn't want to be there. So a little bit too much put into that. But we had the new profile appear here. We leveraged off of this. If you're trading profiles, you get this information bottom right where in the scanner. So now we're sitting here pre-market. We are, 50.75. So we bounced up a little bit. But you know what? The stock is sick. And things on their lows go lower. And this is telling you, if you're going to buy stocks, you can just mark this one off the board. All right. But if you're looking to sell stocks, again, it's in the hole, but you can orient stops around 51.94 unfair highs. We just came off there. Now we're kind of doing this number. We could rattle around down here, but in my opinion, you're not going to get hurt with something like this if the market continues to rally. If the market starts pulling back, game on. All right, so let's take a look at a couple others. a lot of these energy stocks are on here. I'm not discounting that. CSX, the eternal short lately, it seems like. Corning, nice little situation there. $20 stock. Easy, simple play. How about this one? Green Mountain, GMCR. Oof. Oof, oof, oof. Oof. Should I even pull that up? GMCR. If anybody's holding that, they might throw up. GMCR. Yeah. Yeah, I mean, a lot of people, like, they see these things pulling back like this, and they think it's on sale. Well, did you think it was on sale here? Did you think it was on sale here? Did you think it was on sale here? Now we're 30, 40 points lower. I hope nobody's playing that idiotic game that these guys get on CNBC and talk about the nice way of saying doubling down, dollar cost averaging. Don't do it. I mean, if you're in it for a collection area, a span of accumulating a position, and that was your original intent, remember, don't just because the stock's going against you. We're getting way away from what I was originally going to talk about, but just kind of word to the wise, if you guys are out there just starting this game, just because a stock or an instrument's going against you, don't change your original trading plan to put it into your long-term investment. I'll check it once a quarter and hope that it goes back up. I mean, those are dangerous attitudes when it comes to trading. I've seen it take people out in body bags, especially in 2008, and that can happen again. All right, don't think it can't. Always be prepared for something like that. Always put the stops in. And when you're talking about, how do I find stocks that are weak? Again, we just said something before. This is our daily. We let the weekly initiate the long-term trade, and then we let the daily regulate it. As you can see, we're not breaking above profiles. We give new resistance points, new trading opportunities. There's nothing down here. We're so far below profiles, my ears are ready to pop. I mean, this is down here. But if you're shorted, you don't have any new profiles attempting to appear, and you just let the thing keep leveraging down. Now, if you want to leverage some short-term information, we've got the 240s. These are all in the scanner, by the way. I'm going to go back to the scanner. I'm going to kind of mouse over this. There we go. There's those inflection points. All right, on the short term, intermediate term, long term. But there's not a lot to hang on to down here with Green Mountain, and there's not a lot to take a stance off of. We're so far below here. You want to try to catch these when they're getting near inflection points for, just this one I'd probably pass on. It's just, you don't have anything to hang on to down there. And when I mouse over this, I find that the inflection points are way away from the price. And therefore, the main thing I'm trying to say is you're either going to have to orient stops around the 240 inflection points or much, much higher, and I don't think that's a good risk reward. And some people out there may be confused how I've explained this, but if you keep watching this show, you'll start getting hip to basically red means bad and green means good. All right, and then we're going to kind of be able to hopefully get you educated on how to utilize this. Let's take a look at Level 3 communications, LVLT. All right, you got a 1 there, a 3 there. This is kind of possibly just started to move. LVLT. Yeah, there's some guys making comments. I guess you guys have firsthand experience on how things. Yeah, and you know what? There's nothing to replace experience. And if you have experience in dollar cost averaging and buying something down to zero, you have learned that lesson the hard way. So try to learn from other people's mistakes. And here's LVLT, picked it out. I love this thing. I love the risk rewards. 52.82 weekly unfair highs. We kind of got below close below. We went back and retraced to it. Even though this stock on a long term has really done well. Right now, again, showing its hand possibly. Got a little bit of a lid there. The thing I love about it is I know I can put some stops above there based on my appetite for risk. On our automated systems, we orient stops anywhere from 25 15 to 25% into the profile. You can do those math calculations on your own. But the cool thing is 52.44, 52.82, 2 unfair lows weekly and daily. The scanner picked it out. I love the action yesterday. Love that. Now, how's it doing today? Opening around, looks like 51.93, still in the wheelhouse. I just like this one. And the thing is, the targets are really limitless on this one, because you're going to you get into the trade, you're going to let the 240s regulate it down. What do I mean by that? You're going to let the 240s stop you out. And what does that mean? That means that when we start breaching the top of profiles on the 240, or we start seeing new demand areas down here, new longer-term inflection points appear. And again, you can set some monitoring here of your portfolio in the scanner. You'll be able to know that maybe your targets have been reached. And we're going to get a little bit more into education on targets, as the weeks and months go on. This scanner really has just been released on TFNN within the last couple of weeks, and the education side of it, I'm seeing now is going to be very helpful for folks, and also probably very helpful for us. So that's the situation on LVLT. Again, this is not pre-planned. I'm doing a sort here, just like you can, and generate ideas. Here's 3M. You ready for this one? MMM. Here we go. So the first one we looked at, the Green Mountain Coffee. Not exactly the best situation. LVLT, like it a lot, actually. Here's 3M. Here's our daily. Here's our weekly. Again, very similar situation, a little bit stronger. Well, we've come up into major inflection points on the weekly. That's why I like it. And that's what the scanner's telling us, is saying, hey, 3M, bottom, red, coming up from below. And by the way, sitting below profiles on our daily. All right, so, and let me, did I read that right? Let me see here. 72. I think we got some numbers mixed up here pre-market. That happens a lot. So right now, I don't know if this stock's open yet. That's what I'm trying to figure out. So right now, a relatively weak stock at the bottom of weekly inflection points. And this is one, weekly takes precedence over daily on down the line. That long-term lineup on the weekly unfair lows is really, really important. And again, very similar to LVLT. This sort's pretty simple. The cool thing is being able to place stops above there. If you guys are considering going long, you want to see this thing start to turn green on the scanner, and take a look at some shorter term momentum plays on it to make sure that's coinciding with the long possibility. But right now, I'd opt out on the longs and look at the shorts. Shown its hand a little bit early, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just like 3M we looked at before, I want to show Goldman Sachs. I mean, bottom, we can find things that are pulling back into these inflection points to give high probability battle areas that you can actually hopefully take advantage of. So again, Goldman Sachs was one of those we looked at the other day saying, you know what, this is a strong stock, got on support, market's been pulling back. We probably want to look at this as a buy side. Very similar situation. The scanner picked out Wells Fargo. Let's see, right here. This was before all these announcements and everything else. So here's the weekly. Again, right there. How do you know where to buy on a pullback? That's the eternal question. Voila. Hope you guys are seeing that. Similar situation, JP Morgan. How do you know where to buy it on a pullback? Achi mama, right there. All right, so again, scanner puts that on the radar screen, and you're looking to find stocks on support in a market that's pulling back. You can find them. So what do you do here? Let's try to find ones that are sitting at the top of a daily profile that have been weak. Very well. Market hadn't changed much since last night. We had a couple of these on the radar screen last night in the webinar, but here you go. Here's meeting that criteria. And let's see which ones are kind of just ramping up to the bottom from already being weak. So again, HCP Johnson Controls, those are at two major inflection points there. Which way do you go? Which side of the fence do you perform, the buy side or the sell side? Need to look at the price action, whether we're coming up into it or coming down into it. But I'll tell you what I'll do. I'll look at leg Mason here. We looked at that last night. Let's opt out on that one. This is like the oil stocks du jour. God, my goodness. It's like they're all sitting on the cliff ready to go into the abyss. It's amazing. Let's take a look at oil. That puts some ideas in your head for sure based on that criteria search. But let's take a look at oil while I'm thinking about this. Or while you're probably thinking about this. Fact of the matter is, had the breakdown again. This is our long-term profiles. The scanner is saying, and let's go to oil. Boom, futures. WTI crude. See that bottom right there? That's letting you know we're kind of at a critical area, right? But long-term trend is down, critical area, a little bit non-directional on the other two. But let's take a look at it. So, we always talk about this. Orange bar appears. That will be a yellow peel back on the scanner. See those yellow peel backs? That means a new profile is attempting to appear. New profile appeared right after that orange bar, after the peel back on the scanner. And we talked about, might want to sit tight here. New demand area. That's a target in itself. Got to pay attention to it. Wait for more breakouts. We basically not wanting to get away from this area down here. I don't like the concept of double bottom, triple bottom, all that kind of. I think those are meant to be broken. So I'm looking at this to sell closes now, and maybe some intraday crossing the border here below 51.49. I think we've got that retracement already. The scare back, $2 or $3 barrel rally to get some people out who are trying to hang around down here at the bottom, and maybe jumped on the bandwagon late. I think you've got some shorting opportunities here, and look at this. Here's the situation with 240. Does this look like it's getting ready to do a massive throw up or what? Stay tuned for Larry. You'll love it. Be back tomorrow, or might be back Monday, guys. Might be off tomorrow. Find out today. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.